Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, dubious speculation. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Link is in the description below. I will remind you that sale is going to be ending in just a few days, so make sure you check that out if you want to lock in the lower rate. Let's go ahead and jump in. So, it's kind of fun occasionally to just do a dubious speculation video where I don't really have that much of an agenda, right? I don't really know everything we're going to talk about between now and the end of the video, but it's more of an exploration of ideas, right? And kind of talk about how we got to where we are today and what could be coming in the coming months. So, first of all, if you were to look at the bull market support band, Bitcoin arguably, at least in the short term, obviously things could change by the end of the week, but in the short term, this looks like a rejection off the 20-week moving average, right? And if you rewind the clock and you go back to what I was saying throughout March, April, May, June, and July, this is what I've been saying. I mean, it is, and it's been a slow process, but this is what I've been saying for the last half year. And essentially what it is a repeat of 2019. Now, I got to be honest with you guys. There's part of me that is finally starting to think about the 2019 comparison as uncomfortable. And the reason is because when I made the comparison to 2019, earlier in the year, back in March, when everyone was screaming from the rooftops that I was wrong and that Bitcoin was going to 100K before the halving and all that stuff, or by the summer, it felt like, all right, 2019 seems valid, you know? Everyone else is stuck on this, like, it's the halving year, it has to do something very specific. But now I have found that a lot of the critics are now also in the 2019 camp. So there is a part of me that thinks there's going to be a change soon to the trend. All right. And the reason is because once the masses start to believe in it, then the trend has to change, right? If everyone's looking at it and they're like, oh, this is what's going to happen, not only are the people that said this was 2019 half a year ago still saying it, but now you got the people that, mocked them half a year ago also now saying it. So it almost seems like if everyone believes it, at some point, the trend has to change. Does that make sense? That's kind of at least how I'm thinking about it. And to some degree, it has been a remarkable comparison. It has worked out so well. And if you're new to the channel, the main reasons that we identified this 2019 comparison was because of really 3 or 4 different things. The first of which is gold. Now listen, I'm not asking you to care about gold, okay? Personally, I think it's a good hedge, okay? And I have been pretty vocal that I am bullish, and I have been bullish on gold. I actually said I think it's going to go to 2,500 before it gets a real pullback. Now it's at 2,500. I don't really know. But I'm not asking you to care about gold in the same way that you probably care about Bitcoin. I don't care about gold in the same way that I find Bitcoin interesting and fascinating. I don't. But I'm not asking you to either. I'm asking you to view gold as a signal more than as an investment. Now, personally, I do own some gold, right? Not as much as Bitcoin, but I do own some. But I'm not asking you to view it in that way. I'm not trying to convince you of that, because even if I were trying to convince you, I don't think I'd have any luck. What I'm trying to say is don't think about gold as something I'm trying to convince you of. Think about it as a signal, okay? And for gold, when it breaks out, it historically has been a risk-off signal for the Cryptoverse. You will see that there was a range that gold struggled to break out of throughout all these years, and then once it finally broke out, it marked quote unquote, a mid-cycle top for Bitcoin. You see that pretty clearly, marked a mid-cycle top. Same thing happened this time, and this is something we were watching very closely, was when it breaks out, it would likely mark a mid-cycle top for Bitcoin this cycle too. And you can see that it has. And I even said back over here many times, there's plenty of tweets, plenty of videos, that, what if it just does the same thing? What if? Now, the silver lining for the people who didn't believe in the 2019 comparison is that the angle of descent hasn't actually been all that bad so far, right? I mean, if you look at this, it's really not even been that bad. Bitcoin's still more or less around 60K. In 2019, the angle of descent was quite a bit worse. You see how different this trend here is to that one? Nevertheless, the patterns are remarkably similar, where you get a high and you almost immediately get a lower high, right? You get this high in March and then almost an immediate lower high in April. So in that way, it's remarkably similar just in how it initially started, because that was June and then July. And then it's funny because I said that the very first test of the 20-week SMA will likely just be a wick, and then we'll see Bitcoin bounce back off of it and go back up and put in a lower high. And I can't tell you how many people were shouting from the rooftops about an immediate leg higher back in June when Bitcoin went back to 70K. And I was like, guys, this is what happened in 2019 in August, right? Instead of this cycle, it was March, April, May, and July. Last cycle, it was June, July, August, and October. You see the difference, right? So it's remarkably similar. Now, one of the things I said is that if this is to be a mid-cycle top, then the expectation is that it would take 6 to 9 months. More specifically, if you look at the top over here, it actually took 25 weeks to bottom, ignoring the hard landing. And I'll be frank, guys, we could have a hard landing again. It's not like, we have an inverted yield curve. It looks like the 2-year, 10-year could be uninverting soon. I think on some lower time frames, we've already seen it sort of wick into uninversion territory. Right now, the 10-year yield's 3.837. The 2-year is 3.867. Really close, right? 3 basis points away from uninversion. Now, the 10-year and the 3-month have a long way to go. But it's not like you can't have a hard landing, right? You certainly could. So far, it's been 24 weeks, I believe. I could be wrong about that. It's 24 weeks. And coincidentally, 25 weeks would be September 2nd, the very first week of September. That's how long it took in 2019 before the lower high structure was broken. But there's a couple of things that it's important to keep in mind. There should be a deviation at some point, right? And I've said before, if everyone believes in the comparison now, which it kind of seems like everyone does to some degree, then the comparison has to change at some point. And I don't know exactly what it's going to look like, but it could be a number of things, right? One thing to consider is, yes, this took 25 weeks over here, and therefore it might be similar this time. Maybe you get a little bit more weakness going into September, followed by a nice move back up in October. But there's sort of like another thing to consider, and that is when you look at interest rates. Bitcoin still continued this downtrend even after rate cuts arrived. And you could argue that Bitcoin didn't really begin a durable change in trend until after there had been a sufficient amount of cuts from the Federal Reserve. So you could see something similar where we go beyond the 2019 comparison, and then we just get straight up into monetary policy, which would be about, which would basically say lower highs and lower lows until there's a sufficient pivot by the Fed, right? And you could argue that in 2019, by the end of the year, that was a sufficient pivot. I mean, the S&P kept on putting in new all-time highs. Yes, we got the pandemic-induced recession, but you could argue that would have been a soft landing had that not occurred. There have been examples of soft landings in the past, 1967, 1995, where we had inverted yield curves. We did not immediately get recessions. So you could have argued that that would have been a soft landing had the pandemic not occurred. But again, it took, 75 basis points of rate cuts to make it happen. So it is true that at the very least, and I said this half a year ago, at the very least, the market would be in a downtrend until September at the earliest, if it follows 2019. There's a chance that that could be all it gets, right? There's also a chance that it just continues this pattern until there's a sufficient number of rate cuts from the Federal Reserve. The reason it would fundamentally make sense is that if you think about it, interest rates have been 5.5% for a long time. Going back to 5.25%, it's probably not going to really move the needle for a lot of people, right? I mean, it's not like all the companies out there are like, oh, now it's only 5.25%. Let's start hiring tons of people. Now, it is true that some of the smaller market caps companies might be able to get, more favorability with banks now that it seems like loose monetary policy is coming in. But there's still no guarantee it's going to be enough until the Fed cuts a lot more. So I think it's important to remember that even after rate cuts in 2019, Bitcoin did not exit that downturn. And it really wasn't until the end of the year where it started to pick back up. And really, it was the following year, right? It was 2020, the market finally started to pick back up. And it took out the lower high structure. Now, technically speaking, it didn't hold it for very long. But you can see that lower high structure was eventually broken, just like this one will likely also eventually be broken. But in the short term, I think it makes sense to sort of respect the trend. And right now, Bitcoin is really struggling with the bull market support band. And I said this back over here, the first test will just be a wick. After it could be a fake out below it. And then you'll start to spend more time below it. I also talked about it in the context of the 8-week SMA. How the 8-week SMA is going to be a difficult thing for Bitcoin to get back above and durably hold. Doesn't mean it can't ever, right? Of course it eventually will. But that's one thing to consider. And remember, back in March, when gold broke out, we identified this, well in advance. And I said that Bitcoin would likely be in a downtrend for at least half a year and that the altcoin market would get absolutely wrecked because ETH Bitcoin was breaking down. And when ETH Bitcoin breaks down, historically, alts usually drop about 70% over the next 6 to 9 months. And so all that seems to be playing out. Other metrics that we looked at, right, were things like USDT dominance, right? And that is one that I continue to look at because, every single time that we get a move up by Bitcoin, I keep going back to this trend line. And I'm like, well, is USDT dominance broken off of this higher low, higher high pattern? And you can see that every single time that USDT dominance hit this trend line, it led to a pretty large correction in the Cryptoverse. It did, right? In fact, all these other prior corrections had at least 50% drops by Bitcoin. And I mean, so far this time, Bitcoin's only dropped, 30%. Now, other altcoins, if you look at other cryptocurrencies, you look at some altcoins, some of them down a lot more, right? In fact, Ethereum dropped from 4,000 to 1,900 already. So some of them have already had 50% drops. Historically, when ETH Bitcoin breaks down, it drops 70%. So this was something else I pointed out back in March, that it's hitting this long-term trend line. And what if this time is not different? And you can see that it wasn't different, right? It's played out the exact same way. Now, the other thing that I think was convincing to us back in March was when you look at like the ROI of Bitcoin, right, from the low. If you look at say cycles 4 and 3, you can see that in cycle 4, Bitcoin kind of got ahead of schedule for a while. And then as those rate cuts arrived, it got back in line. You could argue the same thing has happened this time, right? It got ahead of schedule, and then as the rate cuts finally arrive, it gets back in line with the prior cycles. And in fact, at this point in the cycle, last 2 cycles, this was essentially where Bitcoin's ROI from the bottom was. Now, if you look at it as measured from the peak, though, arguably, Bitcoin is still, quote unquote, ahead of schedule. Because at this point in the last 2 cycles, Bitcoin was still about 45% down from the all-time high at this point in the cycle. To give you an idea of what that would theoretically mean, 45% down from the all-time high, and we're going to take the all-time high from 2021 because that's what it's comparing to. 45% down from there is at around $37,000, $38,000, right around 38. Let's get it, yeah, about 38K. I don't know if Bitcoin is going to go that low, but there's a chance that it does. Okay, and you know, I've had to listen to all year people tell me, you know, why the 2019 comparison is wrong. You know, it's a halving year, blah blah blah. But it's possible, right? It's possible that happens. Again, it doesn't have to. You know, if you look at ROI from the peak, but you take it from the April peak, you could argue that it's right here, right? But going back to that ROI after the bottom chart, I'm just looking at sort of cycle 4 to cycle 3. Cycle 4 didn't just get back in line, but eventually it went below it because we got a hard landing. So, you know, that could always happen in cycle 5 as well, right? It's not like Bitcoin's immune to that type of stuff. One of the things I've thought about too, and again, I don't know the likelihood, but if you look at the 100-week moving average, you know, after Bitcoin broke out above it in 2019, and as those rate cuts finally arrived, Bitcoin fell back to its 100-week SMA. And coincidentally, the 100-week SMA is right around 38K. And remember what I said, 45% down from that all-time high puts you right around that 100-week moving average. Which again, as measured from the peak, is where Bitcoin was at this point in both prior cycles. So, but again, the cycles have a way of playing tricks on you, right? Like at some points, the cycle will get very overheated and make you think that it's going to be, you know, different. And then it just ends up not being different. The same thing happened last cycle, right? So it's important to remember that things could play out in a very similar fashion, where you just get lower lows and lower highs until you get a sufficient pivot from the Federal Reserve, whatever that might be. Okay. Again, the silver lining, so far at least, is that the angle of descent hasn't really been that bad in 2024 compared to 2019. That doesn't mean it can't change, but I mentioned many, many times that Bitcoin would likely hit 50K before September, by September at the latest, and we already hit it in August. And the reason I was looking at that was just following this pattern over here. So I don't know. I mean, I certainly don't know exactly what's going to happen, and I think, you know, it's fine to sort of admit that. But it does go to show how things aren't all that different, and how some of those things we were looking at back in March, despite how heavily they were criticized, actually held some merit, right? I mean, even looking at the fib retracement stuff, which is again dubious at best, Bitcoin retraced to the 4.236. And do you guys remember this comparison that I made? How in 2021, when you look at the 2017 top, in 2021, Bitcoin only went up to the 3.618. And then in 2024, it went all the way up to the 4.236. And the reason I bring that up now is because, again, and I've mentioned this many, many times, Total did the exact opposite, right? Total did the exact opposite. Because what Total did, total market cap of all the crypto, What it did was in 2021, it went to the 4.236, and in 2024, it went to the 3.618. So they reversed. That's why Bitcoin dominance is so much higher today than it was back in 2021. In 2021, Bitcoin's price essentially the same as today, right? I mean, if you overlay Bitcoin USD onto the chart, you'll see it. Price of Bitcoin, same as it was over here in 2021. Main difference, back then, dominance was like 40%. Today, it's 57%. Again, it's that rotation of capital. So in thinking about what's going on right now with Bitcoin, I think Bitcoin has a way of sort of sniffing out weakness in the economy before the stock market does. One of the reasons I say that, there's a lot more passive investing going into like 401ks and stuff, more so today than, really at any point in the past. I mean, just more and more people are doing that stuff. And so I do wonder if Bitcoin has a better way of sniffing out that weakness in the economy. It's kind of interesting, right? Because, in 2019, it was when gold broke out. And normally when gold's breaking out, it's sort of a signal that something is wrong. But the stock market doesn't necessarily get that memo immediately. It can take years, right? I mean, and I've heard a lot of people say, well, why is Bitcoin diverging from the stock market? As if it's something, entirely foreign concept. Same thing happened in 2019 when gold broke out, right? I mean, the S&P kept going up. Bitcoin went down. You're seeing the same thing happen. It's almost like this is the jaws of liquidity between Bitcoin and the S&P. It's a similar concept as if you were to overlay, global net liquidity and how the jaws of liquidity open at certain points in the cycle, right? Because for a long time, they're more or less in, moving in tandem, right? If liquidity's going down, Bitcoin's going down. If liquidity's going up, Bitcoin's going up. But at some point, the jaws of liquidity open. You see that? And this cycle, they opened in April or May of 2023. But same thing happened in prior cycles, right? I mean, if you look at prior cycles, you will see the same exact thing happened where, you essentially had these jaws of liquidity as well, right? Where they move in tandem for a while, but then at some point the jaws of liquidity open, and then eventually they snap shut again. One other thing I mentioned a lot back in March was that if you were to look at the extension from the 20-week moving average, we're going to look at the natural log of the price over the 20-week SMA. One of the things I mentioned back then was that historically you would expect diminished volatility from the 20-week moving average, and sure enough, I pointed it out. It's funny. I've pointed it out twice now, and I'm not saying necessarily on the YouTube comments, but in some of the other message boards and stuff, I've seen so many people give me a hard time about this chart, about talking about the extension of the 20-week moving average. And yet again, I talked about it in early 2021, and that was the reason why I said we needed a summer lull. I mentioned again in 2024 and said that was the reason we probably going to get a summer drop. And I said that if it falls 2019, the summer lull will extend into the winter, into the fall and winter. And now it seems like it has, at least into the fall. But you can see that every time Bitcoin hits this trend line, it gets a correction, right? This time wasn't different. Now, one interesting thing to keep your eye on is the RSI. The RSI is something that is dubious at best. And I don't really put a lot of faith into it, honestly, because one of the reasons is like Bitcoin dominance weekly RSI. I've been having people tell me for years now why dominance had topped out, because of the weekly RSI was there was like bearish divergence forming on either the daily or the weekly or whatever. So again, the RSI is not something to take to the bank at all. But with that said, if you look at the weekly RSI, actually, I'm not that interested in the weekly. Look at the 2-week. Keep an eye on this area right here, because this is the area in 2013 where the 2-week RSI bounced. I don't think this is 2013 because this is not a post-halving year. So I think it's very well could not bounce at this level like it did in 2013. It could. I'm only pointing it out now so that you know that there's a possibility that it does. But I still am in this camp. I'm still in that camp right now. I could be compelled to change my mind at some point, but I haven't changed my mind just yet. Again, guys, I'm not trying to tell you how to invest. I mean, for Bitcoin, DCAing at risk levels you're comfortable with tends to be the best long-term winning strategy. I'm just pointing out these, caveats with certain metrics that often get ignored when I'm mentioning them and the price is manic, and then only later do people start to care about them. But I would implore you to try to care about them when it matters and not just kind of mock them and discount them because you think it has to be different. And the same, it goes with gold, it goes with the USDT dominance. I pointed this out many, many times. And here we are, all these months later, and Bitcoin has not really been able to get above its bull market support band in any durable way since March, other than just getting bounces off of it, but not really putting in new highs. And if you look at the altcoin market, it's been even worse, right? I mean, very similar, in fact, right, to 2019, where you sort of get your first rally, and then you get your second top. And then eventually the altcoins just kind of bleed back down to that first pullback, right? You see that pullback there, and then eventually they bleed back down to it. Same thing's happening, it looks like, right? I mean, this is your altcoin market. You have your first top, your second top, and it looks like, you have this low right here, and eventually altcoins could very well just bleed back down to that low. Others already have, right? I mean, if you look at others Bitcoin, but if you look at others, it's already done it. You see that? Very similar. I mean, like, that looks really similar, does it not? I think monetary policy is important. It's playing out in a very similar fashion. And actually, one of the things I mentioned before is that you might actually see smaller market cap alts do a little bit better than higher market cap alts for a little while. Because if you look at others divided by total 3 minus others, so you're looking at small market cap alts divided by high market cap alts, they were hitting this long-term trend line. And when it bounces off this, it means that smaller caps are doing better than higher market caps. That doesn't mean they're going up on their USD pairs. It could just mean that smaller market cap alts are not bleeding as much, maybe because a lot of them already were bleeding for a long time, but it's just something to consider. So, with Bitcoin, as I said back in March, if it's going to follow 2019, the earliest it would turn around would be September. If it follows 2019. If it follows all of 2019 and you get a hard landing, then it could take 9 months, which would mean through the end of the year, through December. And I'm kind of think there's a good chance that the market does stay boring for the rest of the year and kind of just slowly bleeds as people really struggle with altcoins. It's one of the reasons why Bitcoin goes down is to crush the altcoin market. And I'm not saying all altcoins are bad, but a lot of times you'll get these, like, as Bitcoin goes higher and higher, more and more scams pop up, people lose their money, and then Bitcoin eventually drops to sort of put those altcoins back in their place. But so there's two ways to look at it, right? I mean, you can look at it from a time perspective and say, well, in 2019, it took 6 months for the lower high structure to change. That's one way to look at it. That might not be the only way to look at it. Because again, the other way to look at it is not just, it took this long. The other way to look at it is to say, it didn't break above it until after we had a few rate cuts, right? After about 75 basis points of rate cuts, then the lower high structure was broken. Right now, I'm leaning towards that view over just following 2019 forever. As I said before, Seems like everyone's now on board with the 2019 view when most people half a year ago mocked it. But if everyone's on board, then something has to change, more than likely. So what happens if the way it changes is it just the timing is different because the timing of rate cuts is different. The other thing to remember too is that back over here when Bitcoin did get this rally, it was only about 27 weeks. And then the bleed was about 25 weeks. So basically Bitcoin spent about the same time going down as it's been going up. It's kind of a scary proposition if you think about it, because over here, Bitcoin basically went up for about 68 weeks. Now, I'm not implying that Bitcoin has to go down that long, but anything's possible, right? I mean, 68 weeks would put you all the way out until halfway through 2025. There are some, it's not like there's no reason to believe that that could happen. It's possible. I'm not saying it should be your base case. It's not mine, but it is possible. And there's some precedent for it. I mean, one of the things I've looked at before is, is the altcoin market and trying to find things to compare that to. And what I've often found is one of the best comparisons for the altcoin market. And one of the things I said before, right, is that even in last cycle, alts put in new lows in the halving year. Okay. Yes, it was a pandemic-induced recession, but, whatever, right? There's always a reason. I thought, like, what, is there anything that matches such a long sort of cycle here for this move, right? A long move down, long consolidation, a move back up, but it's a lower high, and then they come back down as Bitcoin gets a correction. And the thing that I think you can take a look at, and this is really getting really dubious at this point, is the move from 1946 to 1949 with the S&P 500, which occurred during a period of high inflation following World War II, right? All the money printing. And what's interesting is if you take a bar pattern here, and if you overlay that with Bitcoin US, or sorry, not Bitcoin, but if you overlay that with the altcoin market, this cycle, right? The width here is kind of off because I didn't measure it exactly, but it's about the same. Like if you actually take the time to like sort of match all this up, it's about the same. I'm not really doing it justice, but basically it looked something like that, right? And the reason I bring it up, right? The reason I bring it up is because in that cycle for the S&P during a period of high inflation, one of the things you'll notice is that the amount of time it took for the S&P back then to go from this high to sort of that high was about 25 months. And it was still mostly at those highs even after 30 months. 30 months. So 25 to 30 months. So if you go look at total 3 and you take that, from the high was right there. So that right there is about 27 months. So there's a similar time frame. And again, it was during a period of high inflation. But again, the reason why I bring it up is if you look at the S&P back in 1946 to 1949, we actually saw a deflationary crash. And that deflationary crash occurred in the post-election year. So it'd be the post-halving year, and the bottom was in June of 1949, right? That was a post-election year. So the bottom ended up being in June, and it actually occurred during a deflationary crash, right? So this is the U.S. inflation rate year over year. If you draw a sort of a horizontal line at 0, you will see that we saw a deflationary crash, and that's why the S&P put in a new low in the post-election year. So when you're looking at something like Bitcoin, and you're wondering how long could it go on for? How long could the lower high, lower low structure go on for before the trend changes? I think it could go on as long as the rest of the year. That honestly seems about right to me. It's possible that it could be broken in October as early as rate cuts arrive, if perhaps the neutral rate is higher than the Fed thinks. And if they cut 50 basis points or something, which they're probably going to cut 25, but if they were to cut and it ends up being, they end up going to a level that's lower than the neutral rate, then it's possible that the downturn, the downtrend could be over as early as September when they cut rates. So that's sort of like the most optimistic scenario. I would say that's optimistic scenario. I would say more moderate scenario is by the end of the year, because last cycle it was about, it took about 75 basis points of rate cuts to put in to basically take out that lower high structure. And there's a good chance that the Fed is going to take several meetings to get 75 basis points of rate cuts in, right? It could take September, November, December, right? It might actually take till the end of the year, and then you might get a spring back up in January 2025. That's kind of what I'm leaning towards right now. But there's also examples where you get deflationary crashes, like in 1949, where you continue to see the downtrend for longer. That could be more in line with that view of like, what if you spend the same time amount, if you, like back in 2019, Bitcoin spent 28 weeks going up and then about 25 weeks going down, right? Then we had a hard landing, but I'm talking about exclude the hard landing. 28 weeks going up, 25 weeks going down, about the same. And here, that was 68 weeks going up. It's already been going down for 24 weeks. 60 weeks puts you a little less than a year from now, right? So that would be if it followed sort of the length comparisons, right? If it were to spend the same amount of time going down as it goes going up. A consideration, right? Don't feel like you have to rush and be like, oh, well, Ben says this or Ben thinks that. I'm just pointing out this is a possibility, right? I think a lot of people just assume the Fed's going to immediately come to the rescue and print everything back and pump up your altcoin bags, but there is a reality that they might go slow and it might take a while, right? It could. Maybe it takes till next month if the neutral rate isn't as low as people think, or maybe it takes till the end of the year if the neutral rate is maybe somewhere in the 4 to 5% range, and maybe it takes until mid 2020. Maybe it takes longer if it's even further away. If you're not familiar with the neutral rate, there's this like theoretical idea about R star, which states that there's a neutral rate, such that if interest rates are above that, the economy is slowing down, and if interest rates are below that, the economy speeds up. And so there's discussions, well, where is the neutral rate? Is it 3%? Is it 4%? Is it 5%? Is it 7%? Right? Or what if we're still below the neutral rate? And that might sound like a perplexing idea, and I don't agree with it. I mean, I think the neutral rate is lower than where we are, but if you're only looking at the S&P and saying, well, it's basically at all-time highs, or close to it, is it, right? Are we really that far above the neutral rate? But I think we are. I mean, if you look at the unemployment rate, it is starting to go parabolic, right? So I would keep that in mind. I think it might be about time to deviate soon from that 2019 comparison and say, what if it just takes a certain number of rate cuts before Bitcoin can durably get out of this downtrend that it's in? And I'm sure we'll test that idea many times, right? It's kind of the same idea. Like, I remember, you guys remember with ETH Bitcoin and the merge, and I remember saying like, lower highs. I just remember telling all the ETH maxis over and over and over again, right? These are all lower highs, whether you like it or not. And so ETH Bitcoin topped out 1 month before the merge, and then it's just been lower highs ever since. I think that probably will come to an end soon, probably this year, and ETH Bitcoin will bottom out before the end of the year. It could bottom out as early as next week, but it could take as late as December. So I think that downtrend might actually be over soon. But then, normally, remember, alt Bitcoin pairs bottom before alt USD pairs bottom, because then they go down commensurate with Bitcoin USD. So the same thing could be said, right? I mean, 1 month before the merge, ETH Bitcoin topped out, and then it's been lower highs ever since. 1 month before the halving, Bitcoin USD topped out, and it's been lower highs ever since. And I pointed this out many, many times. And every time we get a rally, people lose their collective minds, and then we keep dumping back down. Now, again, I'm not oblivious to the idea that we could just be getting back in line with prior cycles. And I've mentioned that many, many times. Like, there does exist a scenario where we're just kind of slowly moving up here until October, and then things accelerate from there. Possibility, especially if you're in the left translated peak camp with a peak in late 2024, like a lot of the people are. A lot of people that were in that camp, though, I think have tried to quietly walk that back, but it's always a possibility. There's also a possibility that the top's already in, right? And that's sort of an uncomfortable possibility, I think, for a lot of people, but there's always a possibility. I think the biggest evidence for that, again, it's not my base case, I want to be clear, but I do think the biggest evidence for that would be that, like, well, technically speaking, the dot-com crash sort of kicked off in March of the election year, right? March of the election year. And then it kind of slowly trended back up and into late August. And then the downtrend finally began. The recession finally arrived. And you could argue something like that's going on right here too, right? Sort of topping out March of the election year, getting a pump back up in August or something, and then seeing the market sort of deteriorate after that. But I'll tell you why that's not my base case. It's something to think about, right? It's something to think like, maybe, but one of the reasons why I'm not really on board with that idea is because, if you look at like the social risk, it's at 0.1, right? When I think about .com, I think about how basically it seemed like everyone was involved, at least from what I've heard. Like, everyone was trading .com stocks, kind of like 2021, right? When everyone was trading cryptocurrencies. But I look at it, I'm like, the social interest is just so low right now, right? It looks a lot more like 2019 than it does like 2017 or 2021. And when you think about like the .com crash, you'll hear about how much just exuberance there was and how crazy everything was, and how many people were investing in tech stocks. And then it took 2.5 years to sort of get them out. But I don't see that right now. I mean, I see a market that hasn't really had that much social interest in years. In fact, if you were to look at the advanced decline index for the top 100 cryptocurrencies, it keeps on putting in new lows, right? I mean, it looks like the bear market never really stopped for a lot of altcoins, because a lot of altcoins are near their lows, not near their highs. That's why I'm more so in the 1946 to 1949 camp, where I'm kind of more in that camp, I think, right now than I am in like a .com camp. Now, I'm not saying there's no similarities. Like, there's some, right? I mean, when Cisco flipped Microsoft to become the number one company in 2000, that marked the top, and Nvidia flipped Microsoft. Coincidentally, it flipped the same company that Cisco flipped back then. And I put out a tweet on that day saying, hey, maybe it's time for a correction. And then, of course, now, the Nvidia dropped like 35% after that. So there are some similarities, but I also could very well see it just being more similar to like 1946 to 1949 than what we saw in the .com crash. So, as it relates to Bitcoin, I think right now, Bitcoin is sort of stuck between a rock and a hard place, right? Like, it needs looser monetary policy, but it's probably going to really need more than just 25 basis points of rate cuts. It really needs about 200 basis points of rate cuts, is what I would say. Get it back into the 3 to 4% range, and then Bitcoin might actually be able to break out of this downtrend. I'm not sure if it's going to break out on a 25 basis point cut. From a timing perspective, if it were to break out in October, it would match 2019, but it would not match 2019 in terms of the number of rate cuts. You could also argue that 75 basis points of rate cuts in 2019 represented a larger percentage of the overall Fed funds rate, because the Fed funds rate back then was like what, like 2.25, 2.5. I don't even remember, but it was nowhere near what it is today. And back then it was 2.5. So 75 basis points was a much larger percentage of the overall Fed funds rate. 75 basis points today is not nearly as much. So yeah, I mean, I think it kind of makes sense what's happening, and really what would make a ton of sense is if this just continues with occasional lower highs for a little while until, say, like September, October at the absolute earliest, but easily going through the end of the year potentially, and then ETH getting that larger correction into its logarithmic regression band, which it hasn't actually gone to yet this cycle. And remember, in 2016, ETH also had sort of this wick near the regression band in August of the halving year, and then in Q4, it finally came down into the regression band. And in order for ETH to go down, the market probably needs to stay relatively boring, or people just need to not be interested in the altcoin market. And in order for people to stay uninterested in the altcoin market, then it just means you're not going to have a ton of rate cuts this year. They could come next year, but you still might only get like 50 to 75 basis points, maybe 100 this year, which would still be more in line with 2019, which also saw ETH going to the lower logarithmic regression trend line in Q4. So whether you look at it 2016 or 2019, ETH did the same thing. So yeah, I mean, that's where I stand. I mean, that's sort of your dubious speculation for the week as it relates to Bitcoin. I do think the 2019 comparison in terms of time is going to have to be retired soon, because I think now that the masses believe it, it's probably time to pivot to something else. What I would say it's probably time to pivot to is just follow monetary policy. And it's probably going to take a few rate cuts. But once you get a few rate cuts under your belt, it's possible for Bitcoin to maybe break this structure. And of course, I mean, you're going to get your first rate cut next month. So next month, as I said half a year ago, next month would be the earliest that Bitcoin could break out of its downtrend. The absolute earliest. And it's almost September. I think it could still struggle just because we're still not looking at like a lot of rate cuts. But we'll take it one step at a time. 1 week at a time. And, I think base case right now for me is that the market is still relatively boring for a few more months, but I'm willing to pivot. I'm certainly willing to pivot as the data continues to come in. I think the most concerning thing right now, is the unemployment rate. I mean, look, it's starting to go nonlinear. I mean, it is nonlinear, right? It's parabolic. Normally, that's not a good thing. So, something to think about. The other thing I was talking about a little bit is if you look at the S&P, let's think about how do you identify the bubbles with the S&P, right? How do you identify bubbles? It's like, what if we incorporate some of the metrics that we follow, like the unemployment rate, divided by the unemployment rate squared, in fact, and you'll see how the S&P gets into these sort of horizontal phases before recessions occur, right? Here's this was just before the recession in the early 1990s. But you see how it does the same thing? I was like, well, what if we incorporate other things that we follow? Like, I don't know, inflation and interest rates. And then you get this chart, which is kind of eerie. Because if you look at it, it sort of looks like the S&P goes through these bubbles, that it eventually returns back down to this trend line. And it just kind of looks like this is the biggest one of them all. So that's also something to think about. We'll continue to follow this stuff and see, does this play out like prior cycles? Does it not? Where are there deviations? But I'll be here every step of the way, theoretically. And we'll take it from there. So if you guys like the content, make sure you subscribe, give the video a thumbs up. And again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Links in the description below. Sale is going to be ending in a few days. I'll see you guys next time. Bye.